This is today's Daily Market Comment here at XM.com by Haralambos Pisuros. I'm Cristina Marujos. The dollar strengthened against the other major currencies on Tuesday, with the only exception being the yen, suggesting that the dollar's gains may have been the result of safe haven inflows. Today, the U.S. currency is pulling back. Indeed, the greenback managed to gain ground without any data or headlines spreading a fresh wave of optimism in regards to the U.S. economy. On the contrary, disappointing earnings results may have revived recession concerns. The adverse effects of the latest banking turmoil have yet to dissipate, which adds pressure to equities, but also to Treasury yields. The disconnect between the US dollar and Treasury yields validates the idea that the dollar is benefiting from a risk-off environment rather than stellar economic data or even bets for more rate increases by the Fed. Another quarter-point rate hike is almost fully priced in for next week's Fed decision, but investors are also pricing in slightly more than 2 quarter-point cuts by December, with more to come in 2024. On the contrary, the European Central Bank is forecast to deliver 3 more quarter-point hikes this year and no cuts at all. There is a profound divergence in monetary policy expectations between the European Central Bank and most of the other major central banks, and that's keeping the euro in uptrend mode. A further pullback in euro-dollar cannot be ruled out if the greenback continues to attract safe haven flows, but it is hard to envision a full-scale reversal at this moment. The divergence in policy expectations between the Fed and the ECB could keep the bulls in the game, who may attempt to do a comeback soon and aim for another test at around 110.70. All 3 of Wall Street's indices tumbled more than 1% yesterday, with the tech-heavy Nasdaq plunging around 2% and recording its biggest single-day slide since March 9th. It seems that the increasing recession concerns may have prompted some investors to abandon risky assets like equities, but the picture is far from being bearish. Although it fell yesterday, the S&P 500 remains relatively close to the key resistance territory of 4150, and with the futures market pointing to a higher open today due to upbeat results from Microsoft and Alphabet, another test near that zone soon cannot be ruled out. Valuations suggest that many stocks remain overvalued, but even if stock indices experience deeper slides, a decent performance by high-growth firms may keep the losses limited. Thank you for watching the Daily Market Comment here at XM.com.